Welcome back. Joining me to put the day's markets action into perspective is Annatjie Van Rooyen from MyWealth Investments. Annatjie, thanks so much for joining us today. Now, it's been quite a mixed week for global markets. I guess, markets being moved by news out from the States. We had the Fed minutes just reaffirming that we are probably going to see, those rate cuts coming through from September. And then we have the Jackson Hole Symposium taking place today. Just how much of a market mover will, commentary out of Jerome Powell be for markets?
Good afternoon, Annatjie, and thank you for having me. Yes, I think the Jackson Hole Symposium is actually the main event of this week. So like you have rightly mentioned, we have seen quite a bit of volatility as we have seen uneven data coming out of the US. So there's no clear trends developing there, but every now and then our markets do get spooked on economic growth concerns in the US. So we are going into that event with quite a dovish cocktail, and we are hoping that Jerome Powell will continue to be dovish because that will certainly comfort markets. And we've also seen the rand strengthening today. It's probably on the back of this main event that we are awaiting. So very, very important event. Everybody is paying very close attention to that. Definitely overshadowing.
Yes. So are we seeing, Annatjie, traders, just taking a breather or just letting that rally kind of breathe? Because we did see markets reach really high highs last week on the back of those US economic prints.
Yes, look, our market is also heading for quite a strong close, and probably we will see a gain of 5% for this week, which is excellent. So it's a mix of quite a few things. We're expecting a 25 basis point cut in the US at the September meeting, and we're hoping that we'll see some clues regarding that and the timing of that rate cut. We've also seen in South Africa that CPI dropped to 4.6%, which is very close to the midpoint of the range, and that is what the Reserve Bank has been looking for. So it also opens the door for a rate cut in South Africa, maybe not September, but definitely then in November. So all of this is very good news for the South African market as well as the other overseas markets. So even though markets are in overbought territory and have already discounted a lot of this information, if you now see Jerome Powell becoming hawkish all of a sudden, that will definitely trigger quite a bit of volatility in the markets. So I think as long as he continues to be dovish and there's no surprises, then markets can probably consolidate at these levels. There's no reason for a sell-off other than technical reasons and taking a breather, as you have mentioned. But based on fundamentals, the South African market's still undervalued.
Listen, Annatjie, I'm crossing my fingers, I'm crossing my toes for those rate cuts very, very soon. So Powell should just stick to his guns come the Jackson Hole speech. Let's move over to Japan, where we are seeing a hiking cycle there. So I guess, the central bank's governor on that end just delivering some hawkish comments, those comments not coming as a surprise, considering that they are in their rate hiking cycle.
Yes, no surprise there. And I think it's a good thing that he actually came out and made those hawkish comments, because he can't drop a surprise on the markets again. It was chaos the previous time, and he has already, in the previous time that he made a speech, he backed down on his hawkish comments, and he was more dovish. Now he's becoming more hawkish again. So, but it's fine. He must stick to his mandate and do what he's got to do, but he has to be transparent and he has to provide guidance that is reflecting what the policy is. So we didn't see much of a reaction in the bond market or in the currency market. Initially, those markets sold off, but they recovered towards the close. So no surprise there then.
Let's get into some company news now. We had results out from Gold Fields, one of the few gold players not really benefiting from those high gold prices. But this, of course, is on the back of its own operational challenges. It's also lowered its annual output forecast for the second time this year. These numbers not really looking pretty.
No, they actually disappointed the market. So that share price, I think at one stage it was down close to 6%. And it's all about the production numbers. And yes, they have been affected adversely by weather conditions, especially in Chile and Australia. But they've also lowered their guidance for the full year. And for this company to be able to capitalize on the strong gold price, they need production numbers, which they haven't been able to produce. So I suppose, you know, you need to ask yourself the question of whether you want to do the safe haven trade by investing in those mining companies or rather just buy the rand price of gold that comes with less risk, I think.
Something to think about there. Grindrod, in the meantime, slashing its dividend by 33% as earnings came in flat. What did you make about those numbers in particular?
Yeah, the numbers also disappointed, definitely worse than expected, but I'm not too concerned about it. I don't think it's a massive surprise because they are expanding into Mozambique and they're actually doing quite well there, and they've had quite a bit of capital expenditure. So they will reap the benefits from the capex in the future. And, you know, with Grindrod, there's always the possibility for future value unlocks in terms of possible corporate action going forward. Plus, you're sitting with a valuation that's really not demanding. So I still think there is an investment case to be made for Grindrod now. I'm not too concerned about those numbers. On the local side, they'll also benefit from infrastructure development planning in the near future. So I'm not worried about that result.
So you are seeing some value in there, but Grindrod not your stock pick. What is it that is? What is it? Are you hanging your hat on today?
You know, I always pick the SA Inc. stocks.
Yes.
I've never ever chosen any of the international ones. So seeing that Alphabet, the holding company of Google, is down 15%, I think that gives us a buying opportunity if you don't already have exposure to the AI stocks. And with the forward PE of 21.7, I think that's a fair valuation. One just has to be careful because they are facing antitrust issues and they might have to pay a hefty fine. But I think it's already discounted in that share price. So I do think that the current level is quite attractive to get an entry.
So Alphabet, one to look out for. Annatjie, thanks so much for your time and just taking us through the day's markets action. That was Annatjie Van Rooyen from MyWealth Investments.